Hello, everybody, and welcome. As I like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. Well, you've been following along with me. You can see the market has kind of been on this little bit of a ride, taking a bit of a dip over the last few days towards the end of last week, and because of that, volatility has spiked. This is always where we start, which is the SPY, which is the ETF for the S&P 500. If we look at the Nasdaq, it looks like it's taken a bit more of a hit than the S&P 500. Usually they kind of go together, but this one has seemed to be going down a lot more than the SPY, and of course because of that, volatility is much higher here at 71. If you look, and I'll go back to SPY so you can see that number there, you can see it's only 33. So the QQQ, or the Nasdaq, seems to be twice or more volatile than the SPY. And finally, the Russell, which is small cap stocks. This one has been a lot, not a lot, but different than the rest in that it really hasn't done anything over the last few weeks. With the other ones go up and down, this thing seems to be going straight across. And because of that, volatility is low down here at 26, lower than the other two. So what are we going to trade this week? Well, it's earnings season, so a lot of stocks are having earnings. So what I like to do is try and get into stocks maybe that had really big moves a couple days after a big move and the volatility is still high. So let's look at Tesla, and you'll see Tesla took a huge dive on earnings right here, and then the next day took more of a dive. And because of that, look at volatility. It's extremely high compared to where it's been over the last year. Usually around earnings, stocks are volatile, and this thing has maintained its volatility, and it's at a pretty big low, the lowest it's been in 6 months. So, as a contrarian, I'm going to do a short put vertical, meaning I expect it to go up, and I'm using volatility to sell a vertical. And the way we do that is we go to a trade page. If we look right here, here's 40 days, that'll be 39 tomorrow. Here's 54. I generally prefer monthly cycles. They're generally more liquid than the weeklies. And this is all both in our range of around 45 days. So I'm going to go straight to the 54 and just use that as my barometer for making the trade. If I open this up, what I'm looking to do is you'll see these are $5 wide strikes, which means I'm looking for 33 cents per dollar width, and these are $5 wide. So when I make this trade, I'm looking for a credit of $1.65 or more. So how do I find that? I just start selling verticals and I just move it around till I get to the number I'm looking for. So I'm going to go down a couple strikes, try this one out, and you can see we're at 195. If I go down one more to the 295, you can see I get 175. So either one of these is completely fine. I can go to 300 and collect more credit, or I can go down to 295, collect less credit. That just gives me a better POP, or probability of profit. Again, I'm further away, so it only makes sense that there's a better chance this trade is a success. So I'm going to go down to this one. Whoops. So assuming everything stays the same tomorrow and the stock opens here at 313, I'm going to sell the 295 put, which is about $20 below the stock price, buy the 290 put to make a $5 wide vertical. And as long as I'm collecting at least $1.65 or more in credit, this is a valid trade. And if it's not, if it gets too little, then we're just going to start moving this strike up this way, closer to the stock price until the $5 wide vertical collects at least $1.65 or more. And that is our trade in Tesla post earnings, contrarian while volatility is still high. So before we continue on, I want this concept to sink in for a minute because this is what learning to trade options actually means. It means you have no boss, you have no employees. You are essentially creating your own job. And in this new world, as everything gets harder, wouldn't it be nice to be reliant solely on yourself? My goal here is your financial freedom, and we do that by getting you to a level of expertise and confidence similar to mine. For anyone who wants clean, simple, reliable guidance, I created the Essential Income System. You get the benefit of a structured, research-backed, experienced trader like myself, and all you need to do is follow along. And no, these aren't make-believe trades. These are fully formed trades that I'm actually doing myself in real time and sending to you in real time that are ready to execute. You don't have to guess, you don't have to stress, you just plug right into a system that works. And for those interested in not just copying trades, but actually gaining the confidence to create, make, and manage your own trades, I've created the Pro Trader Academy. It's not just alerts and it's not just courses. It's a complete trading system designed to take you from beginner to intermediate to advanced to consistent. What you need is a structured system, not scattered information. The Pro Trader Academy includes the essential income system, but it also includes every course I've ever made, along with every course I will make in the future, plus webinars, plus potential office hours, etc. This is valued at over $2,000. Now, normally the essential income system is $49 a month, and the Pro Trader Academy is $99 a month. But good news, because you showed up here today, you're in luck. You can get the essential income system for only $1 for the first month, or you can get the Pro Trader Academy for only $19 for the first month by going to sharpertrades.com and using either one of these coupons. So, again, go to Sharper Trades or use the attached links. Again, there's no risk. You can cancel anytime. Give them a try. Make sure they are for you. And I look forward to having you join me on your journey to financial freedom. Hope to see you there.